Now let's cross live to New York, where Caroline Woods, our U.S. business correspondent, is waiting to discuss the market's opening and the latest business news making headlines in the United States. Hi, Caroline. Before we check in on the latest in business, I wanted to ask you about the California wildfires, which are happening at both ends of the state. What do we know about their impact so far?
Yes, it's a dire time for California, with wildfires both burning in the north and southern part of the state. At least 31 people are dead, and more than 250,000 people have had to evacuate. Now, in the north, the so-called Camp Fire burned down nearly 7,000 homes and businesses in the town of Paradise. That's 40 miles northwest of the state's capital, Sacramento. It's the most destructive blaze on record in California. The fire had burned more than 111,000 acres and was 25% contained by late last night, according to officials. It's also poised to be the deadliest blaze on record in the state. Its death toll of 29 now equals that of Griffith Park fire in 1933, which has been the deadliest. But there are still more than 200 people missing. So we're awaiting updates on those people. And then in Southern California, the Woolsey fire has scorched at least 85,500 acres and destroyed 177 structures. It's been tearing through Malibu mansions and working-class suburban homes. Now, the blaze is only 15% contained, and at least 2 people have died in that fire, according to officials. Celebrities, including reality star Kim Kardashian, who had to evacuate her home, asked for prayers and donations for residents and first responders at the People's Choice Awards on Sunday night in Santa Monica. You know, a lot of celebrities live in this area, so many have chimed in. President Trump also chimed in on the fires via Twitter. While on a trip to France, he tweeted early Sunday saying, "With proper forest management, we can stop the devastation constantly going on in California. Get smart." The president has previously blamed California officials for fires and threatened to withhold funding, saying the state should do more to remove rotten trees and other debris that, kind of fuels the blaze. That being said, state officials have blamed climate change and said many of the burn areas are actually in federally managed lands. Unfortunately, the hot, dry winds feeding the flames are expected to continue into the week, so it could cause more devastation. We'll be sure to keep you posted there.
Well, thank you, Caroline. 7,000 houses in Southern California and 177 structures in the north is very devastating indeed. But speaking of California, a new report out shows that million-dollar homes are on the rise, and the Golden State is home to many of them. Tell us more about this report, Caroline.
Yes, this is a new study from real estate research firm Trulia. It shows that the number of U.S. homes valued at $1 million or more increased by more than 400,000 this year. That's the largest annual jump since the housing price recovery began back in 2012. Nationally, slightly more than 3 million homes, or 3.6% of the total, are worth at least $1 million. That's up from 3.1% last year, and it's doubled since 2012. As you said, many of those million-dollar homes are in California. 29% of all neighborhoods in the Golden State have a median value in the 7-figure range. The San Jose and San Francisco metro areas have the largest shares of million-dollar homes and also notched the biggest increases over the past year. That isn't too much of a surprise. Of course, it's home to Silicon Valley, which is a big hub for tech and innovation and social media. And as we know, there's a lot of money there. New York, Florida, and Washington State are also on the top of the list. So despite the market's recent cool down, home values continue to rise. They jumped an average of 7.6% in just the last year alone. It's good news for those selling their homes and, of course, people who have a lot of money, but it also really underscores the continued affordability crisis.
Well, Caroline, as much as I love this talk on million-dollar homes, we now have to talk about oil production. So several oil-producing countries met in Abu Dhabi this weekend to discuss oil production. What do we know about those meetings, Caroline?
Well, we know that Saudi Arabia plans to reduce oil supply to world markets by 500,000 barrels per day in December. That's according to its energy minister. This comes as the OPEC power faces uncertain prospects in its attempt to persuade other producers to agree to a coordinated output cut. The Saudi energy minister told reporters on Sunday that Saudi Aramco's customer crude oil nominations would fall by 500,000 barrels per day in December versus November due to a seasonal lower demand. The cut represents a reduction in global oil supply of about 0.5%. Saudi Arabia has increased output by just 1 million barrels per day this year, under pressure, of course, from U.S. President Trump and other consuming countries to help balance the market to compensate for lower supplies from Iran due to those U.S. sanctions. However, as you know, because Iran's customers were given those waivers to continue buying crude, concerns have grown about market oversupply now. That resulted in oil prices falling below $70 per barrel on Friday from $85 back in October. Meanwhile, sources told Reuters that Saudi Arabia is discussing a proposal that could see OPEC and non-OPEC oil producers cut output by up to 1 million barrels per day. So this appears to be kind of an abrupt change from OPEC's September meeting when some of the world's leading oil producers were talking about pumping extra oil into the market in order to help soothe intensifying supply shock fears. That being said, Russia's energy minister said Sunday that he wasn't certain the market would be oversupplied next year. He said the oversupply for the next few months would be seasonally driven, while by mid-2019 the market could be balanced again and demand could even exceed supply. Now, in other oil news, the Saudi energy minister said Saudi Arabia, which of course is the world's top oil exporter, is not preparing for a breakup of OPEC. He added that the group will continue as the global central bank for oil markets for a long time. This comes shortly after reports surfaced last week suggesting Saudi Arabia's top government-funded think tank had been studying the potential impact on oil markets should the influential 14-member alliance break up. Apparently, that's not going to be the case. And also, I should note, BP CEO was on CNBC Europe, and he said another factor impacting oil markets right now. Who else? President Trump. He said Trump is keeping many people guessing on many fronts, which, of course, affects the oil markets, or he said it affects the oil markets. He also noted uncertainty in supply from Venezuela and disruptions in Libya. Now, taking a look at oil prices today, they are on the rise. U.S. crude is up 1.3% in early trading. Brent crude is up 1.4%. So we're looking at a surge in oil prices on all of this news.
Well, Caroline, at least there's some good news there, but the opening bell is set to ring in less than an hour. How are the futures poised to begin the day, and what could drive trading?
Well, it looked like we were going to have a mixed open when I was first looking at the futures, but now it looks like we're going to have a lower open. The Dow futures are down about 0.25%. NASDAQ down more than that, about 0.5%, and S&P futures down about 0.2%. So looks like we could see a lower open. I will warn that we could see low trading volumes today because here in the U.S. it's Veterans Day. The bond markets are closed and many schools are closed as well. So some people could be taking the day off and extending their weekend. Not me, unfortunately. Now, last week's stocks lost ground on Friday after a week of recovery from the October sell-off. Oil prices were weak and there was more evidence of a slowing Chinese economy. Oil prices are higher today, so we'll see how that impacts. I'll definitely be watching those. As for what else I'm watching today, definitely Apple and Alibaba. Alibaba had its annual 24-hour Singles Day shopping event yesterday. The Chinese e-commerce firm said Apple was the top-selling mobile phone brand, topping its Chinese rivals. Alibaba didn't give specific figures, but the U.S. tech giant was one of the 237 brands that surpassed 100 million yuan, or $14.4 million in sales during this record-breaking Singles Day. Alibaba's event, which is known as Double 11 as well because it falls on 11/11, November 11th, it raked in nearly $31 billion in 24 hours, which was also a record. Last year, it sold about $26 billion in goods, just to compare. So we'll see how that moves both Alibaba and Apple's stock today. Also watching United Parcel Service, or UPS. That could be a mover today because the delivery service avoided a work stoppage during the peak holiday shipping season, or just ahead of the peak holiday shipping season, after its workers approved a new contract. Now, the agreement prevents what would have been the country's first work stoppage since 1997. So we'll see if that impacts the stock today at all. Also watching U.S.-listed shares of German company SAP. They could be under pressure because the software company just announced it will buy Qualtrics for $8 billion. So we'll be watching that. Now, there's no economic data out today, but looking ahead a little bit later in the week, Wednesday, we'll get a read on inflation at the consumer level with the CPI report. Also on Wednesday, Jerome Powell will take part in a moderated question and answer session at the Dallas Fed. So we'll see what he has to say about, the current conditions of the economy, interest rates, and potentially trade. Then on Thursday, we'll get October retail sales data. And also we'll hear from a few retailers. They'll release quarterly figures. We'll get Home Depot reports tomorrow before the opening bell. That, of course, is the home improvement giant. And then Walmart reports Thursday ahead of the open. So we'll see what Walmart has to say ahead of the key holiday shopping period. And also, just finally, 4 major Canada-based weed producers are set to report earnings this week. It's less than a month after Canada officially legalized marijuana. We'll hear from Aurora Cannabis, Canopy Growth, Cronos, and Tilray. Now, legalization occurred after the quarter ended, but it will still be insightful to see what they have to say, especially as pot producers were really scrambling to satisfy demand in the third quarter. That could impact costs and impact the bottom line as well. We'll also look closely for their outlook as well. So lots on tap for this week. As always, we'll be sure to keep you up to date.
Well, Caroline, before I let you go, just to cheer you up for having to work on Veterans Day, I'm going to ask you something fun. I don't know if you went to see a movie this weekend, but let's get a box office recap. What brought people to the movies this past weekend?
I was traveling this weekend, so I didn't get to go yet again. I still have a few on my list, as we've talked about, but I can tell you, The Grinch didn't just steal Christmas, it also stole the box office's #1 seat this past weekend, earning $66 million in the U.S. and Canada. That's according to preliminary estimates. It's another sign that Americans are getting into the holiday spirit before Thanksgiving. We love to just bypass Thanksgiving and move right on to Christmas. The Grinch is contributing to what's expected to be a record year in receipts for Hollywood, along with performances of Venom, A Star is Born, which we've talked about, and also Bohemian Rhapsody. Actually, Bohemian Rhapsody, which is still on my to-do list. It's that Queen biopic that we talked about last week. It grossed almost $31 million in its second weekend to finish Sunday with $100 million domestically. So a pretty key figure there. Wasn't all good news at the box office, though. Zombie thriller Overlord made its debut with a reported $10.1 million, which is pretty weak. And also The Girl in the Spider's Web, which is Sony's attempt at rebooting the Girl in the Dragon Tattoo series, but it has a new leading actress. That disappointed as well. It only earned about $8 million. So The Grinch got all the cheer for Overlord and The Girl in the Spider's Web. It sounds like they got more like a lump of coal.
Well, thank you, Caroline. I guess I have to go see The Grinch as well as A Star is Born. Thank you so much for joining me today. Arise U.S. business correspondent there, Caroline Woods. You're watching the Global Business Report here on Arise News. It's time now for another short break.